crypto loans, and then leveraging those funds to buy additional cryptocurrency. Is that a sound business strategy, or is it simply just gambling? That's what we're going to be getting into in this morning's video. Good morning, everybody. Now, for those of you who don't know about crypto loans, I'm going to quickly touch on the topic and just show you two of the places where you can get a Cefi and a DeFi crypto loan. Two of the places that make a lot of sense to me. So the first one is Altcoin Trader. You can go to Easy Loans. Now there's a little bit of a trick to get to Easy Loans, and I have made a full video on Easy Loans. I will leave that video linked at the end of this video if you want to go and get more information on the Altcoin Trader Easy Loans. But for those of you who just want a quick summary, what it's about is you can put up collateral in Bitcoin, Ethereum, gold or silver. And basically, let's say you put up 100,000 in Bitcoin, you can loan 50,000 rands. And then if the price of Bitcoin drops and you no longer collateralize to that 50% ratio, once it drops down to a 60% ratio, your loan would be liquidated. And when we say liquidated, you don't lose everything. You lose 12% of the outstanding funds as a liquidation fee. Your assets are sold, your loan is paid back, and you are given the remainder of your assets. And as you can see, this would be considered a Cefi or centralized finance loan, and the rate is 5.5% per annum. Now, another platform that I like very much, and now of course we're playing in the DeFi space, is oasis.app. I've also made a video on that, but the video is reasonably outdated. I will leave a link to the video at the end of this video. But two things to notice. First of all, with this, Oasis has changed the minimum amount that you can loan, and I think at this stage it is 5,000 DAI, which relates to 5,000 US dollars. And because it is on the Ethereum network, you're going to pay fees on a good day of around about $350 to $450 to get your loan sorted and go through all the processes in the smart contract. So just to bear that in mind, it is going to be 5,000 Rand plus in fees just to get this loan executed. So this loan is often only viable if you're going to be taking large sums of money. If you're going to be taking smaller sums of money, the loan becomes no longer viable. Altcoin Trader has no fees. It's easy to take a loan. There's very little barrier to entry, but you're going to pay at 5.5%. On Oasis, the percentage is going to be considerably low. You can see that you have got options of 0.5% and 0.75%. The trick with these options, of course, is that you can't get a lot of your money. In other words, they are highly collateralized loans. So I'm not sure exactly what the percentage is, but it's around about 30 or 40%. So you have to put higher capital to get less money. So those are the two loans. Very briefly, we've gone over a centralized finance, a Cefi loan, and a decentralized finance loan, a DeFi loan. Now, let's get into the topic of the video. But before we do that, let's quickly have a look at the markets and the prices. As we can see, Bitcoin is down quite considerably. And when I say Bitcoin, you guys know that I'm referring to the entire crypto market. So we can see we've got everything. If we look at the 7-day Bitcoin down 14%, Ethereum down 16%, and the list of red just goes on and on. Only the stable coins showing any type of resilience, obviously, because they are stable coins. So let's get to the topic of the video. The reason that I pointed out the prices, though, is just to give you an idea of when you would use loan leverage to buy additional crypto. So what a lot of people are doing is they are taking loans, and once they have taken the loan, they use the funds to buy additional crypto. The idea here being that if that crypto goes back to the higher prices that it's been in recent times, they can sell that crypto, pay off the loan, and keep the change. I think you guys are getting an idea of the strategy here, and it can be very, very effective. I've recently been chatting to a group of people that are doing this, and they're doing it quite excessively with Polygon or Matic. And the reason that they've chosen this coin is because when the market dips, it seems to dip dramatically. And when the market makes a small recovery, it makes a quicker recovery. In other words, the dips and the increases are quite exaggerated when you compare it to more of the stable assets like Bitcoin and Ethereum. And of course, that would amplify the opportunity to take leverage on a loan, buy that crypto, wait for the price to pump, sell that crypto, pay off the loan, and then keep the profits or the change. Now, let's talk about this and let's try and get to the conclusion. Is it a sound investment strategy, or is this just simply gambling? I think you will have heard on a lot of YouTube channels when they talk about leverage trading. You constantly hear the more sensible YouTubers warning their audience about leverage trading because sure, it does allow you to gain a higher profit, but it really cuts you and you can lose everything if that trade goes south. Now with loans, it's not as severe, but it is the same principle, and that is something to note. So I would like to suggest that while it is a possible way to make some really good money, and the word leverage implies an exaggerated effect, in other words, a bigger profit. It gives you the opportunity to make a bigger profit. It gives you the opportunity to buy crypto when crypto is down, when the prices are low and you don't have money. You have existing crypto, but you want to enter the market. You just can't because you don't have fiat, you don't have dollars, you don't have rands. So what you do is you loan and then you can buy that crypto. So it allows you to enter the market at a time of your choosing. And then of course, as that crypto goes out, it allows you to exit at a time of your choosing. But if the trade goes south, you are risking your capital. And that is key. That is something that you should consider. So let's try and draw up a conclusion as to whether this is a sound investment strategy or whether it's gambling. I would like to say that for the most part, for most people in crypto, people that haven't been in crypto for an extended period, it is simply gambling, right? In fact, let's be honest, for everyone, it is gambling. However, if you have extreme knowledge of the markets, if you are working with funds that you know you can leave and you can ride out a storm for 3 to 5 years if the market goes south, and if you are a trader that has been reasonably successful and has a knowledge of the peaks and troughs, how the market goes up and how the market goes down, it is at best gambling with a high probability of success. So I would like to suggest that if you do not have spare funds, funds that you can leave dormant, invested for that extended period, if you are not well versed, a veteran in the crypto space, I would personally leave it alone and study it, understand what it is, understand the concept, understand that this is an arrow in your quiver. It is one of the trading tools that you can deploy if you understand the concept after you have studied it and you have watched and observed the markets. But if you are a trader that has been studying the markets for a number of years, you understand how markets work. You understand the principles of crypto loans, and you understand the principles of collateral. You understand the principles of liquidation and how those ratios work. And you are fully versed in this. It might be something that, used responsibly, could be a very good financial strategy. So having said all that and trying to paint it from both sides, I'd like to point out, guys, that I would not recommend this for most people. Do not loan against your existing capital to make a quick profit or to leverage a profit by buying assets while they are down. Provisor, unless you are well versed in the space, prepared to take the loss, don't need those funds, and have the ability to leave those funds and ride out a storm for a number of years. Guys, I hope you found that content insightful. I hope that this has piqued something and maybe just given you a look at crypto loans. As I said, I will leave the 2 videos at the end here so that you can go and look at them if you want to study more about crypto loans. It is certainly something that I believe if you have knowledge of, you can use it not only for leverage, but for everyday things. Michael Saylor has often said, never sell your crypto. If you need liquid funds, you go and you borrow against your crypto. And the question very often is, how do you borrow against your crypto? Well, with crypto loans, like with platforms like Oasis, like Altcoin Trader. If you know of other platforms that you believe are good for crypto loans, please drop a comment below so that I can explore them and understand how these platforms work. To me, the two that make sense are, of course, Altcoin Trader's Cefi Loans, which you can find at Easy Loans, and Oasis. But as I said, this loan is more suitable for bigger investors. Guys, smash that like button. I will see you next week.